Good afternoon. Boy, I can't tell you how happy I am to be here with you. This is Post Market, June 16th, 2021. And most market guys out here and girls, they touch on important things. They do the technicals. They talk maybe a little about the Fed, but, other than Greg Manarino, I really don't think anybody out here does it like I do, and why is that? It's because I don't care about viewers. I really don't. I don't need to do this video blog. I don't get paid to do any of this stuff. Maybe at some point I'll make some money off of whatever I do, but at the end of the day, I'm out here to speak my truth and to tell you what I believe is going on, and most people aren't ready for that. It's not the way to get views in this environment. If I wanted to get views, I would go do stuff on GME and AMC. I would go kiss the ass of the Fed, or something like that. I don't know. I wouldn't be talking about all this crazy stuff that I'm talking about, but I'm just prefacing this because this video is going to get crazy, okay? So if you're not ready for that, or that makes more sense. Yeah. No, this one's going to get crazy because I'm going to go off on Fed Chair Powell here. I'm going to go off on the Federal Reserve, and it's beautiful because they deserve it, and look, let's just start with the markets. I told you, if stuff dipped after this 2 p.m. announcement, I was buying, and that's what I did today, okay? So I bought gold and silver, I bought this market, and I actually took some profits on the market as well off of the dip that I bought. Okay. So that's what I did today. What actually happened in the market? What am I thinking about the market? And then we'll get to, scathing remarks later. Okay, so the dollar did end at 91.26 as I'm looking at it right now. I drew a trend line here, and the break point on the trend line was 91.11. But that being said, what did I also say? I said I want to see consecutive closes, multiple consecutive closes above this level for the dollar. And if you watch that 91.1 level, I drawn this trend line before any of this stuff happened at 2. It bounced there or went down, but then it did break through. And so we're just above that level. And I said, if it continues higher above this level and stays there for a couple days, I would get a little concerned about the market more specifically, because we can't forget that the dollar index is a basket of fiat currencies, right? So all of these countries are competing to destroy their own currencies. Read the book Currency Wars by Jim Rickers, you'll understand. And if you understand this environment, you don't need to read the book anyways, because inflation is the name of the game. This is how you gain more power. This is how the banks as a whole around the world gain more power. Okay, so the dollar above 90, 1.1, but it's really nothing to me right now, and I think it was pretty big opportunity today, honestly, because, well, let's get to that later, but the markets were down substantially. They were down over 1% on the S&P 500. We finished down 0.5% on the S&P, 0.4 on the Nasdaq, 0.87, 0.8 on the Dow. And I'm looking at the future, so maybe the actual one is different, but whatever, man. 1% on silver. It actually outperformed gold, which is good to see, in my opinion, because I love silver. It's my favorite asset. Gold at 1830, down 1.4%. Okay, big deal. Big deal. Metals are going much higher, and the market's going higher too. Crude oil finished down 0.35%. But let's get to Powell. So at 2 p.m., the Federal Reserve made this announcement. They didn't do anything right now, but they have this dot plot, which is where a bunch of Federal Reserve presidents predict where they think they will want the federal funds rate and the discount rate of the Federal Reserve, which is, call it interest rates, to be in the future at certain points in time. So 2021, 22, 23. And the only thing they did is they said in 2023, they were predicting overall there to be 2 rate hikes. And that is what scared the market, metals, and pushed the 10-year yield, which finished at 1.57, and the dollar considerably higher, 0.8% on the dollar. It is a big move, big knee-jerk higher here. But you didn't see big losses in the market, nor really gold and silver. These are pretty big hits, especially for gold. since it's normally less volatile than silver. But again, not a big reaction to the amount of bump that we had in the dollar. And then, after this announcement, we get the press conference, which is really where the big, stuff is figured out, because that's where Powell sends his direct verbal signals to the market. And there's these two terms. There's hawkish and there's dovish. And hawkish is basically saying the Fed is going to increase rates. Dovish is basically saying they're going to decrease rates or keep things the same. And basically, although the initial statement was interpreted as hawkish, and I think rightly so, in some sense, I believe what I interpreted from the Fed meeting, or the press conference afterwards, from Jerome Powell, I think that was very, very dovish. Because here are some of the quotes that we got from Powell. So, first of all, he's asking, why are we seeing inflation? He's, all confused about this. I mean, duh, why are we seeing inflation? They shut down the entire economy, causing supply chain disruptions, and they inflated the money supply, and they doubled their balance sheet over its astronomical level. So, massive inflation and supply chain disruption. Of course that's a recipe for inflation, and this is with the money velocity at historically low levels. So it's an absolutely absurd thing for him to go out and say, these supply things is because it was an intentional shutdown. It's no, they created the crisis. They wanted all of this to happen because it would kill the money velocity, because it would allow them to inflate to record levels we've never seen before. And they purposely killed the economy, and they're not allowing it to recover. You see, in normal times, you could have a big shock to the economy, but it would come back very quickly. It would come back within a year normally. And this was way, way, way back when it was probably harder. We didn't have all this technology to coordinate things and to reapply things. If the economy were allowed to restructure, it would be back like that. It would be no problem. They don't allow the economy to restructure. They keep the lockdowns in place. They keep people in fear. They keep all of these mechanisms that are empowering them and pushing us down in place. And of course, they're not allowed to talk about this at all. So, and more talk about how they think inflation is temporary. But here's the real thing. They don't think the economy is where it needs to be. I mean, obviously, it's cratering. And this is a quote from Powell. "We will taper when we feel the economy has achieved substantial further progress." Well, there's all you really need to know. I mean, the economy, we were in a depression from 2008 to 2020. You're not allowed to know that, but it's a period of depressed growth. We did not have almost any years where we had above the standard 3% growth that was achieved throughout the 20th century. We were in a depression while the Federal Reserve was buying everything. If you look at their balance sheet, it went straight up during that time. And what happened to the U.S. economy from 2008 to 2020? Well, you might have been convinced that it was good, and for a lot of people it was good. But we saw things like mental health crisis, the opioid crisis. We saw homelessness start to really accelerate. We saw a lot of negative things, and labor force participation rate is still nowhere near the levels before. And some people like to discount that to an older workforce, but look, the economy was bad before, and it was falling before, and this is really, I think, why they created the crisis in 2020, because they knew the economy was really doing poorly, and they needed a better excuse to create a new paradigm for people to frame this new world order that we're in. Here's another quote from Powell. "We will do what we can to avoid a market reaction. I.e., we will continue to buy everything. If things drop, we will continue to buy everything. We won't stop." And they won't stop. And that is why I found it to be a great opportunity today on so many different assets. I really love when they come out and push stocks down, push metals down, because to me, I know the end game. I don't care where they go in the short term. I have very long dated options. I even thought about buying some in 2023 today, but the spreads were a little crazy, so I decided not to. But anyways, let's just keep going through some of these quotes. It's a lot easier to bring demand back up than it is to bring supply back up. Well, this is so obvious. I mean, the only thing that the Federal Reserve can stimulate is demand, in essence, because the only thing they can do is create debt, add digits to a screen and push it somewhere. So they can create demand artificially, but again, eventually, like what have they been creating demand for? Stocks. That's why stocks are almost at record levels right now. They will create a situation where that demand is reversed through another crisis, which will happen in the debt market with interest rates spiking to levels we've never seen before, which will be positive for metals as well. They will create that crisis, and money will move out of the stock market and start chasing the same amount of goods in the consumer sector, which is really when it starts hitting the fan, because people will see their IRAs completely dissipate, but then they will also see the prices of everything else that they need to buy skyrocketing. Okay? And this is really the ultimate negative event that is going to literally kill millions of people and create crime on levels that has never been seen before, I think. But doesn't mean there's not a light at the end of the tunnel. I mean, there's going to be some negative things happening, but for people that can take advantage of this environment, the opportunity right now is opportunity that I have never seen before. I'm young as hell, but you know, I look at history and I've never seen opportunity at this level before, and take advantage of it. You know, don't get fearful when you see this stuff. You got to understand the Fed's endgame, and he's telling it to you in this press conference. So, again, it's a lot easier to bring demand back up than it is to bring supply back up. So, the Fed creates the supply shortages through the crisis that they created, and then they also inflate the money supply. So they're the ones, in my opinion, creating all these problems. If we simply eliminated central banking, I think we would be doing really, really well right now. I think everybody would be in a better situation, other than them, of course. I don't know what we would do with them. What do you think we should do with them? Reply in the comments, right? You know, and he said this was big. He said, dismiss the dots. Don't even think about the dot chart. The same chart that scared the market. And this is something I probably should have mentioned earlier, but they raised their inflation forecast to 3% in 2021. I mean, look, we're at 5% now. It's going much higher. I mean, but they did raise their inflation forecast, and I guess that was interpreted a little bit as, oh, they're raising their inflation forecast, therefore they have to, raise rates. But Powell was talking very specifically about this dynamic between, and he said straight out, we have stagflation. I mean, not quote, but he said we have rising prices, but we also have an economy that is not where it needs to be. So they have to choose between one of these two things, and the press conference confirmed to me, and I didn't need any confirming, I knew this is what they were going to do, that the Fed is going to choose to let inflation run hot so they can continue to print money. They're not even close to done. I've said that the Fed's balance sheet is going to 20 trillion very, very soon, within a year or two, really, and it's just not going to stop. That's really what I have for you. Keep looking at the dollar. We'll see if it maintains some momentum above this 91.1 level that I had penciled out on my chart, and keep our eyes on everything. We'll keep taking advantage of this, and we'll adjust as needed. But right now, I see opportunity in a lot of different things, because Powell was very dovish in these comments. So that's it. I will let you go for now. Please, what should we do with these people? Let me know. I hope it's not too bad, right? I don't know. But I'll see you tomorrow morning, right? Have a good one. Hit the like button, hit the subscribe button. Love you lots.